morning, everyone. Welcome to our Thursday morning trading session. Just a moment here while I get the screen share happening. All right, so let's see what's going on here. It looks like the market giving us a little bit of a soft start. Yesterday, of course, turned out to be a fairly steady rally day. Not quite what I was expecting. I certainly thought that we were going to see the market tail off a little bit. But it wasn't the case. They rallied right into the close, tapered off a little bit through the European and Asian sessions, and just kind of kept tracking sideways for the remainder. I think Jeff mentioned here that he took the Falcon Signal out of the open, and it was a one and done type trade for him. So I'm not sure, maybe it was this one right here. That's kind of your crossover signal, your trend change signal on the Falcon. This morning, no real signals on the Falcon just yet. You can see we're bouncing off of the median support, kind of pinched between the primary support line and the median support. We might have to give them a little bit of time here to sort themselves out. Might have to give them a few minutes. Overall, the market looking a little bit balanced again. Crude oil opening with a rather substantial gap. We'll take a look at crude oil here on the Eagle. Very, very quiet last few days for crude oil. If this were any other market and I saw my Eagle like this, I would move to my alternate settings. I would try the 446 settings. But because I know this is crude oil and this is temporary, I'll stay with the default settings for now. But you can see there's nothing going on, quite literally. Last night, looks like prices falling off a little bit. Didn't really get busy until about an hour before the market opened that we actually saw crude oil prices head a little bit lower. So that's not at all like crude. Okay, we've got a little bit of a downtrend. Here's the first micro-macro cross printing now on the Hawk. We've already had our trend change signal here in the Falcon. And here's the first in sync signal on the Eagle. It's actually a counter trend signal. It's actually not in sync. Oops, I can't afford that. All right, let's take a look at something else here then. Well, the Raptor might be working on a cloud crossover signal. Part of our clouds have already crossed over. So we may see the market retreat now into the cloud and then the cloud push prices back out. Honestly though, sometimes you just have to wait. We all get anxious and we all kind of fall into a routine. I found that by tracking the times that I take my trades, a lot of times, I'll take a trade about 10, 15 minutes into a session, and then about 15, 20 minutes after that, and then about another 20 minutes after that. The market does seem to have a rhythm to it. But I think this is where a trading quota comes in handy. If you start your day with the idea that, hey, I'm only going to take 2 or 3 or 4 trades today, whatever you set your quota at, that takes a lot of pressure off. If I know I'm only going to take 2 trades today, I can hold out for 2 solid signals. All right, this would actually be our first in sync signal now on the Eagle. What I was looking at here earlier was a rule of 3 type scenario. The rule of 3 in the Eagle, of course, being your counter trend signal. And before you can have a counter trend signal, well, you first have to make sure you have a trend. So that doesn't look like it's a problem. Then we need to see a test of the extreme. And I think we're good there. We got that one covered. And now we would be looking for the market to head lower. But we are getting a lot of support off of this 5380 area. All right, so let's put that back on the shelf for now. almost looks like we're going to get a little bit of a retest now. Again, this is typical of a sideways type of trade, right? We've got a sideways market. You can see it as a tight little range this way, or you could expand the range to include yesterday's highs. I think either way will work. I don't think I'm going to hold out for, a major breakout higher. I think we've broken some support through here. And because of that, I think we could see the market head a little bit lower. All right, let's put that away for now. All right, so here is now a chance for a green bar sell on the hawk. If you wanted to try to take advantage of a little bit of a move to the short side. And do we have a crossover signal there yet? No, we don't. What I should have done with this is perhaps split up the trade to be like a 50-50 type thing. Daniel, good question. Daniel says, why wouldn't you look at the red bar buy? Hold on a second, Daniel. There's nothing wrong with the red bar buy. Let me just make a note here before my trade fills. Okay, so Daniel was asking, why would we not look at this red bar buy signal right here? That is a red bar buy, and a red bar buy does tend to be a high probability signal. Well, currently, before that red bar buy, we had the rule of three, right? We had the market suggesting that maybe a counter trend is going to develop. This is a serious thing when you get a counter trend signal printing. A market that is in an uptrend should not be printing a lot of counter trend signals. It should not be testing the extreme without following through. All right, so we got that going on. Then we also broke support right here, which made me think we're going to see another move lower. Again, this is a serious thing to break support. A market that is in a trend does not violate support. Likewise, a market that would be in a downtrend does not violate the resistance area, right? A downtrending market holds the highs and the lows fail. An uptrending market holds the lows and the highs fail. So what we have here now is we have a market where it looks like, and it's early still, but it's starting to look like maybe the lows are failing and the highs are holding. So that would suggest maybe we're again going to see the market head a little bit lower. So it's this context thing that you always hear me talking about. Now, that said, the signal may still work out. I think what I would do is I would allow the ATR to turn over. So right now we are against the ATR. You could use this bar as your signal bar. That would be like a second push on the entry as well. So you could cover your trade, look something like that. I am glad that I just went all in, all out though on the trade, just the nature of the market. So now we're getting another attempt at a rally. You can see here the Falcon coming back now with a late filter entry signal to buy. It's just a jumbled mess right now. Anytime you have a market that is decidedly sideways, try to remember that the very best way to trade this market is to let it break out. Allow it to retest. Prove that it can stay out, and then look to take your signal. Likewise to the short side. Let it break, let it prove that it can stay out, and then look for your signal. Now, I know we're all afraid that if we allow the market to break out, we are not going to get this part here. The market is just going to go fall like a rock without us, and boo-hoo, we missed our chance to make money. It happens, but it's not the end of the world. Would you not rather miss a move like that than end up buying into a breakout only to have the market do this? Right? So you buy into the breakout fails, and then stops you out for a loss. I don't know about you, but it's always better in my books to miss a move entirely than to take a losing trade. Now, even though the market may make a rather substantial breakout, I can almost guarantee you that sometime during the course of the trading day, the market will retest and give you one more chance. It may not be as pronounced as this first move lower, but it will give you another chance. Don't believe me? All right, let's take a look. You shouldn't take everything I say as gospel anyhow, folks. It's very helpful for you to roll back in your charts and examine these things for yourselves. Okay, here we have a decidedly sideways market. It breaks out. Oh, look, it retests, and it starts to head higher. When you do this, though, remember not to split hairs. Right? We're looking, if it isn't a perfect bounce, off the top of the trading range, if it actually got into the trading range a little bit, that's okay. Different traders will look at different price levels. Some traders will be looking at this price level as the highs or the top end of the range. Others will be looking at this level as the top end of the range. What you're watching for is just the general nature of the breakout, and then buyers, in this case, buyers supporting the breakout. Let's find here. Let's do this just like that. Just grab the price bar. This way you know you can't cheat. All right, that looks like a bit of a sideways range, does it not? Let's see what happens. Oh, there's the breakout. Let's see if we get a retest here. Oh, there's the retest. Right, I think we can agree that's a retest now. Okay, is it going to stay out? No, not yet. So this is a breakout that would have likely gotten you at least into a position, if not a profitable position, one that you could at least cover a break-even type trade on, but you get the point. Look, the market did not prove that it could stay out, therefore it did not go any further. All right, now we have a breakout to the upside. All right, a little bit of a sloppy retest, but that might be enough that you could say, all right, what if I covered the trade like that? Oh, all right, can't do it. Let's just do this for illustration purposes. And I don't know how this is going to work out. This may well turn around and spank me. Oh, yeah. Oh, look at this. Isn't that a better retest? Let's see where they go from here. They're testing, and away they go. Oops. Well, they did hit the profit target. All right, so it does happen, and like I said, the best thing for you to do is to go through your charts, identify the range areas, and to keep yourself from cheating, like I said, you can just grab your little scroll bar here at the bottom and just randomly pull it back somewhere, and then play your chart forward. And goodness knows we've had enough ranging days these last few weeks that you should be able to find enough examples. The hard part with all this is exercising the patience to wait for that breakout, because goodness knows we traders are an impatient bunch. right, so we're just kind of flip-flopping around again. No really solid signals. The late filter entry signal never triggered. See, here come the buyers again. Here comes another red bar buy signal. This one might be a little bit stronger, actually, because now what's going on is we're not seeing follow through to the short side, are we? This one has the added advantage of, if this bar finishes on the high, it will be high enough. It's going to print right on the ATR line. So essentially flipping the ATR over. Good question here from Christian. Christian asked, Eric, from a risk point, does it make sense to trade the YM, that's the mini Dow, and the NASDAQ together? Or is it better to decide to trade the NASDAQ alone to not have double the risk correlation? Let me pull up a YM chart here. I used to, many of you will remember before the Raptor came along, I used to split my screen in two, and I would have the NASDAQ charts on the left side and the YM on the right. Normally, one market will give you more than enough opportunities to trade. But sometimes it's helpful to have another market that you're following, just because, well, maybe the one you're watching isn't doing anything, which seems to be the case today. So here's the NASDAQ on the Raptor, or pardon me, yes, the NASDAQ on the Raptor. Very, very sideways, very uncommitted. So let's see what's going on here in the YM. Well, it's kind of painting the same picture, and that's not really a surprise. Because the YM and the NASDAQ are so closely related, ooh, look at that crazy move. I was going to say it's rare for the YM to outperform the NASDAQ, but they certainly did that yesterday. That's a monster move. I think what I would do, Christian, is not so much trade the two different, or have the two different markets so that I could take twice the positions. It would be easier to take double the position or double your normal position size or whatever in either or, rather than take two contracts in the YM and two contracts in the NASDAQ. I would just take 4 contracts in either the YM or the NASDAQ. What is nice to see, however, is when the two markets are kind of moving in sync. There will be times that they're out of sync, but when they are moving together and producing signals together, it seems that the market has a little better follow through. If that makes sense. But technically your risk should always be capped by whatever your percentage is. Yes, Christian, I agree. Christian says sometimes I feel the YM is not so fast up and down as the NASDAQ. That's true. The mini Dow tends to have less volatility. And Jim, who actually hasn't been in the room for the last few days, he is always trading the Dow over the NASDAQ. You kind of pick your pet markets, right? There's always markets that you just like for whatever reason. And so you end up focusing on those. You should balance your market that you choose with your account, however. We talked about that one day during one of our Raptor sessions about how we're looking at the volume, the 3 V's. We need volume, we need volatility, and we need value, namely the tick value. People tend to focus on higher tick value markets thinking they will make more money. They tend to focus on more volatile markets thinking they will make more money. That's why crude oil is so popular. Well, except what we've been seeing the last 5-6 months, crude oil tends to be very volatile, and at $10 a tick, it's nothing for crude oil to make a 100 tick range or $1,000 every single day. And that's just on trading a single contract. Imagine if you had the ability to trade 5 contracts. You can quite literally make $4,000 or $5,000 a day trading crude oil with a relatively small exposure. Now, before you get all excited and start focusing on crude oil, remember that's a two-edged sword. You could just as easily lose 4,000 or 5,000 a day in crude oil if you're being sloppy with your stops and how you're looking after your trades. So what's important to remember is that when you're comparing markets, take a look at the move that the market makes. So for instance, with a lot of people focus on the E-mini S&P, and I'll do this for the benefit of the people who didn't see it the first time. But does the E-mini S&P at $12.50 a tick actually earn you more money than, say, the NASDAQ or the mini Dow, which are trading at $5 a tick? Well, let us bring a E-mini chart over, and we shall see. All right, so here is the E-mini now. And let's focus on yesterday's monster move. Oh, okay, this this might be a bad example because it was a monster move, but let's just see. All right, so what we're going to do is we are going to compare singles to singles. So here's the first signal that developed around the London Open. And we're going to go from that open right to the high. All right, so with the E-mini, that amounts to 1,500 and change. Let's see how we would have done on the NASDAQ. Okay, so here's the same signal, even though it with the NASDAQ, the #1 signal printed back there. All right, so we're going to enter here. We're going to cover below the low, and you can see a lot more volatility in the NASDAQ, and to the high 1160. All right, so here's an example where the extra couple of dollars per tick on the E-mini could have grabbed you another $350. But most times, the moves themselves, well, actually, this is even close enough to make the point. $1,100 versus $1,500. Not that much of a difference given the huge rally that we saw, is it? And yet the NASDAQ trades at $5 per tick versus the E-mini's $12.50 a tick. So why is that important? Well, if I'm trading the NASDAQ, and again, we're just going to compare signal for signal, and let's say I'm in risk percent mode, I can set up this trade. I can leave a reasonable stop. I'm just going to throw that up there. And I can take 2 contracts for about $360. So if I'm trading a smaller account, there's a chance that I can trade 2 contracts. If I'm focusing on the S&P now, well, actually, the S&P is probably going to allow me. So I'm going to run my stop again below that swing. Oh, all right. Well, in this case, the S&P, it's the same setup. We're bracketing the same range as we did on the NASDAQ, but with the S&P, I can only afford 1 contract. So now, the NASDAQ is actually going to be the bigger money winner, isn't it? Because with the E-mini S&P, sure, I made $1,500 overall, but that was only on a single. The NASDAQ, I made $1,160, but I could have traded 2 contracts. So I actually made just shy of, or just over $2,300, $2,320. And that's the thing a lot of people don't focus on when they choose their markets. Oh, shoot, here, let's do this. Oh, sorry, we're in the E-mini. Okay, sure, we'll take the E-mini trade. So we've got the cloud crossover now in the E-mini. And Francisco, as soon as I'm out of this trade, we'll compare it with the YM. But I think you're going to see a similar result. so we really got to get down below these lows. This is going to be a little problematic, this whole zone through here. Clayton asked, is that why you run the YM and the NASDAQ together? Yes, in fact, the late Marsh Jones actually developed a whole trading strategy. He wasn't even following charts. He would watch the time and sales. And he would focus on the YM and the NASDAQ because he knew that if the mini Dow and the NASDAQ both made a solid had a solid spike in either buying or selling in the same direction, obviously, he would have a few seconds to get an order in the E-mini. The E-mini tends to actually follow the mini Dow and the NASDAQ when they're in sync. A lot of people think the E-mini is the leading market. No, it tends to follow. And most times he would just be looking for a scalp or a swing target, so it wasn't like he was watching for full-blown trends. But it was still enough for him to pick up $100 here and there and made the day worthwhile. Yeah, I feel for you, Tony. Tony says, man, I wish I'd waited for the breakout, a breakout and a pullback and a breakout again. I'm way behind for the morning. When will I learn not to trade sideways markets? I feel your pain. I have been there too many times. It always comes from a position of fear. We're always afraid we're going to miss out on something. And you should never, well, you should never feel that way. I know it's very difficult not to feel that way, but try to trade from a position of logic. If you miss the move, you miss the move. You guys have seen me miss plenty of moves here in the trading room. I've missed some monster moves. And there's nothing you can do about it. You just watch the market tick by and you have a little twinge of regret. You know, man, I wish I'd sold it or bought it when I had the chance. Well, you didn't. But that's always preferable to getting into a trade that is not cooperating. Clayton asked, do the settings change with the Raptor depending on the market? Most times, no. We did go over this a little bit with the Raptor tweaks. The E-mini S&P, however, is that market that kind of falls out of the normal parameters. The higher tick value markets, the higher tick value kind of messes up the programming a little bit. And what it does is it doesn't produce enough signals during the day, so you're going to end up with, you know, sessions that look like this, where you're just not getting enough going on each day that you can actually trade it. So when that happens, you need to adjust your brick sizes. The alternate settings to the default 6, 8, and 10, or pardon me, 6, 8, and 12, is 4, 4, and 6. So we're going to move to a 4-tick chart, a 4-tick hawk. We're going to run 4 and 6 tick clouds. And what that does is it opens things up a little bit so that we can get a few more signals. All right, we are struggling here a little bit, but I'm going to try to be patient. Christian says, I'm over 50, so crude oil could give me a heart attack. Yeah, not lately. You don't need to worry about it. But yeah, I've traded crude oil in the past, and it has produced some of the scariest moves I've ever seen in my life. Fortunately, for the majority of those, I was on the right side of the market. Francisco, speaking of crude oil, Francisco says, what about trading the QM instead of the CL, QM being the mini crude market? There's no volume there, Francisco. I wish the mini crude did get more participation, but there's just no volume there. There's enough options going through the crude oil market. You could always try the options. And now we're getting another little bit of retest on the support. Yeah, Francisco says, I'm also trying to decide on trading the NASDAQ or the mini Dow, as I have a smaller account. The NASDAQ volatility-wise really shines. That's not always a positive thing, though, because you can see here on the E-mini, for example, what a nice smooth progression the market made yesterday. And compare that with the NASDAQ, where here's the same day, and just look at that chop that occurred prior to the open. So the NASDAQ will tend to have more volatility to it. The YM will be smoother, however, the moves won't always be as pronounced. And let's take a look here at the YM now on that same move that we were just talking about. So the YM signal producing the same time. So we're going to buy in here. We're going to cover down here. It looks like that's the move right there. So 1,500 and change. So the YM, the outright winner here, because you would have again been able to take at least 2 contracts, effectively doubling your profit. So don't ignore a cheaper market just because it's $5 a tick and you think, oh, well, I can't make as much money. Oh, yes, you can. In fact, you can often make more. The YM is certainly smoother, but you'll need to compare your YM ranges with your NASDAQ ranges. You will find that most times the mini Dow does not range quite as far as the NASDAQ. Now, that's good and bad. It depends what suits you, really. Trading is a very personal business. Very personal. Christian, is it Christian's question? Yes, Christian asked, do you use the 6E on a different tick size? As the 8 maybe 6 ticks? No, for the 6E, I tend to stay with the defaults. The only time I really start messing around with the brick size is if my day looks like this, right? Where I open up my chart and it's obvious I'm not going to get enough signals during the day to take a trade. If I'm only producing one signal a day, that's not enough. So then I'll start to play with the brick size a little bit. And my first option is always to go to the 446 settings. But that said, the nice thing about the new Raptor is it is much more tweakable than previous versions. Tony's watching the 6E as well. He says there's a potential bear flag. Just a moment while I try to load that up. Yeah, Keith says I use the defaults for the 6E, the NASDAQ, and gold on the Raptor. 99% of the markets that you're interested in trading, the defaults will suit you just fine. Unfortunately, the E-mini S&P, which also is one of the world's most popular markets, tends to fall outside of those parameters. All right, so here's the 6E now on the Raptor. Yeah, pretty quiet through the European session. One thing about the Europeans is, I don't know if it's because they don't have as many small speculators as there are in the North American markets, perhaps the markets are more dominated by professional traders. I'm only speculating here, I really don't know. But when the Europeans produce a signal, they tend to stick with it. They don't tend to mess about too much like we do here in North America. We like to mix things up. But you'll notice that a lot of times, here we'll just dial back to yesterday as well, when you get a signal in the European session, there tends to be a little bit more commitment to the signal. This number 2 signal didn't go anywhere, but it did at least give you an opportunity to adjust your stops a couple of times before these number 3 signals came and sent the market lower. The day before in the 6E was just dismal, just a very, very sideways market, but hopefully by now you are able to identify when the market is starting to drift sideways. You're starting to get a lot of yellow bars clustering. Your cloud is twisting up like a rope. Your filter is all over the place. You're producing signals, but it's just not going anywhere. One thing when the market is counter trend, or pardon me, choppy like this, you're always going to be better off taking a with trend signal than a counter trend signal, because the counter trend signal relies on a trend preceding it. A with trend signal, at least there's a hope that a new trend will develop or the original trend will continue. But again, the best course of action, just leave it alone until it gets out. you can see here's the daybreak line. And if we're following just the North American session, it started right about here. And you can see we got a few signals going on here. Remember, in Europe, because of the time zones, the market is really only going to be active for the first few hours because they did most of their work back here. Yeah, see, Christian says, absolutely true. I trade the London Open in the 6E down and the New York Open, the 6E changes the side up. So, yeah, they do like to flip-flop on each other. Okay, just checking here, make sure I didn't miss anyone's question. If I did, you could just repost it. But I think I got to everybody. All right, well, I think it's time to bring my stop in a little bit. The sellers did recommit to the market at this point. See, we sold. Oh, sorry, we sold here. Has it been that slow? I guess so. So I should hold my stop back for a little while longer. Just give the sellers one more chance to recommit to the market, and then I can bring my stops up. All right, here we go. Come on. Come on. There we go. Come on. They're trying. They're trying hard. Man, they're really stubborn. Come on. Clayton says this is like fishing. I get about the same results over the same time frame, but I eventually catch a fish. Oh, I could have a nap. It's so slow. Yeah, I know Tony says, just for the heck of it, the average 10-day range on crude oil is a whopping 86.4 ticks. What in the world has happened to good old crude? It's true, crude oil is so quiet. I don't get it either. let's see here. Christian's asking, it's interesting that the NASDAQ changes the side of the ATR 14 and 2. So it would be better to use a wider stop loss as you use. Well, yeah, when you're looking at your stop loss like this, and you just see the market flip-flopping back and forth, what I tend to do is I tend to focus on a signal that I may have taken and see how that signal would have worked out. So let's say I deem this to be a cloud crossover signal. I know it's a little bit early, but let's just say I chose that signal. Well, then if I ran the ATR stop, I would have been stopped out right here. So the trade never even had a chance. So right there, it tells me this stop is too tight. I need to either widen the stop or I need to select a different stop strategy. What a lot of people don't realize is that the ATR strategy was initially developed as an always-in trading system. We use it as a means to manage our stops. However, it was initially developed as an entry system. But you were always in the market. So for instance, when prices break the ATR, this would be a sell signal. When prices break the ATR to the upside, that would be a buy signal. And you can see for the most part, it doesn't work too bad, except when you get into a choppy market, because you would buy here, you would get stopped out here. So that you would have incurred a small loss. Then you are short from here, and you would have been stopped out right about here. So essentially break even, maybe a tiny profit. Now you are long, and I don't know what happened here, why it didn't trigger, but you would have got stopped out here. Now you go short. And it looks like you probably would have been okay. I guess that wasn't enough to actually flip it over. But you get the point. You're always in the market. So it's okay so long as the market is trending. But once that market starts flip-flopping, you could be in some serious trouble. So for that reason, I tend to leave a wider stop at least to start. I figure I can always adjust my stop. But if I make my stop too tight initially and I get stopped out prematurely, well, I've incurred a loss, I've incurred an extra commission, and now there's nothing I can do with it. If I at least start with a wider stop, I can always bring it in. So for instance, right now, I can probably consider bringing my stop in a little bit. Maybe we'll roll it down there, take a little bit of risk out of the trade, because it seems as though the sellers are trying anyway to recommit to the market. If I don't like the way this trade is going, I can even roll in above the high of this bar right here. So I just think starting with a wider stop gives you a few more options. And again, I'm not liking how this is following through. We should have had more follow through here. We'll go with the bar high low. There. We'll put the stop right there. Now, believe it or not, the best stop, I'm using air quotes, the best stop is still up here. Until prices start trading down here, this is still your best stop. I just don't feel like giving the market that much room anymore. Yeah, I think that's a good observation here from Floyd. Floyd says it makes sense that the market would compress after yesterday's rally. It's like a spring that has to reload. Um, there's a certain amount of truth to that. It used to be, in years gone by, that if we had one rally day, you could almost guarantee another rally day to follow. But those days are long gone. Now, if we get a rally day, a strong rally day, you're pretty much guaranteed that the next day is not going to do anything. Peter says, I think the OPEC $55 target is impacting on crude oil. Yes, definitely it is. It's very un-OPEC-like for everybody to agree on something. Usually, the one thing you can guarantee about an OPEC agreement is that it's not going to hold. Yeah, Tony quoting here, the wreck of the Edmund Fitzgerald with a slight little twist. Does anyone know where the love of God goes when the market turns the minutes to hours? I always wanted to redo the Dire Straits songs, Money for Nothing, and Your Ticks for Free. Tony asking, Eric, just curious, is the Raptor trading training finished? We've gone over all the nuts and bolts of it. These last few Tuesday and Thursday sessions have been more of a review and trying to implement everything. But yes, we've gone over all the, like I say, the nuts and bolts of it. And Adam has asked me to produce a video series, kind of like a little video manual. So I'll be working on that as well. Yeah, you could be right, Christian. Christian says, and the professional traders, after a big rally day, they're all at a party now. All right, here we go. Come on. Hey, man, just cannot get them to budge. waffling. Well, if we can just get them to kind of lean to the short side here, I think we'll be all right. But this bar that's forming, very, very important bar. Yeah, Clayton says I'm ready to roll my stop to the bar high. My goodness, it's painful. All right, come on. They're trying. Well, we might be buttoning up the room here in a moment. Things just painfully slow. I wish I could say it's uncharacteristically slow, but that's certainly not the case of late. Oh my goodness, how long did it take for that bar to form? All right, we're trickling lower here. Oh my goodness, we actually had a bar finish. Come on, get down there. Okay, here we go. Oh my goodness. All right, let's see. Where are we sitting here? Oh, well, we at least made our scalp target. That's almost too much to bear. All right, boys and girls, I'm going to close up the room. We will see you Friday. Hopefully something will be happening Friday. I'm not sure how much more of this I can take. All right, we'll see you tomorrow. Bye for now.